Good afternoon and welcome to the end of day market review for March 8th, 2012. My name is Jason Waugh, one of the trainers and success coaches here with Ideal Trading Lifestyle. I'll be walking us through today's presentation. We're just going to ask that you give this disclaimer a quick read. Once we've done giving the read, we're going to go ahead and get into the agenda. Right. And getting into the agenda, we've got our daily news. What we're looking for here is anything that we feel is going to be affecting the overall market conditions from a point. Right now, news is the #1 contributing factor to what happens in the marketplace. We're going to go ahead and take a look at the market outlook, which will include analysis on the S&P 500. Now, when we look at the S&P 500, we're going to be looking for support and resistance levels, as well as identify the location of the MACD. We're going to move into the volatility indicator, where we'll be able to identify just how much fear or volatility is in the marketplace. There's a couple stocks on our current watch list, so we'll go and take a peek at those. But other than that, there was a stock that we liked from yesterday that looked like it had some potential. We'll just get through all those and then get into preparing for tomorrow, where we're just going to piece them together and see what this means for our customers. Now, if at any point along nobody has any questions, all you need to do is send in a chat box message, or you can raise your hand so we can unmute your telephone line. In any event, we will be doing that at the end of the presentation. So let's go ahead and get started here. So first off, it looks like we've continued to see some optimism in the marketplace, mainly due to the increase in job data and the Greek deal, which seems to be going as planned. Now, it's very possible that that Greek deal could end up changing and then pushing that market back into a bit of a 10. Just going back to the Yahoo Finance homepage, and we can see that we really did end up with green right across the board. Oil, funnily enough, only went up 0.5%. Still a substantial return, but when you see what it's doing in the past, 0.5% doesn't necessarily seem that big. But it's up to 106.69, with gold back up into the 1700s. You've got your S&P went up nearly 1%, and your Dow up 0.5%. So there we go. That's the news. If we go ahead and take a look at the charts for the S&P 500, you can see that they've made 2 days of attempts to get themselves back up into their typical trading range. But we really need to look at this in a realistic manner. First off, we have had that rise, and it hasn't been enough to get us back up into the overhead resistance, because that resistance is rising as well. But if you'll notice, the overhead resistance that was in place throughout the month of February is getting really tight with this one right over here, this rising support. So we are going to see a crossover, and what will end up making this a substantial breakthrough, if it does end up with a breakthrough, is it going through not just this first level down here, but this other one up here. And when it does, then it can be considered to be back in a strong trading range. But right now, we've got a lot of head resistance that we need to deal with. We've got a MACD, which is bearish, sorry, not bearish, bullish, but with the black line still below the blue line. We've had problems seeing that black line cross up over that blue line last month and a half. So we do need to see some strong, tangible data in order to push the S&P 500 back up into an aggressive bull state. And looking at the volatility indicator, it's currently sitting at 17.95. So it's back down. It's starting to be back in its normalcy. Even when it did start to poke its head up above 20, though, we weren't necessarily that concerned because we know that the volatility indicator is designed to range in lower digits without any substantial concern until it crosses up above 30. Yes, we would start to show concern as it crossed the 5 mark and started to pull back in our lot sizes, but we are going to see that this indicator is going to push itself up and below 20 many times over without any real concern. Too concerned about that, but we are certainly aware of a shift in the markets since we broke through that support level just 3 days ago. All right, looking at watch list picks. We've got Woolstock, KSU, and I'm just going to do the quick and dirty approach here. One second, make my turn lines work. There we go. And first off, we've got overhead resistance here. There's other things, falling resistance, which looks like it'll be in the way, but this by itself would be enough to say no thanks. And I'm just going to go through. I'm not going to necessarily point out all of things wrong or right, just the first thing that jumps out. OLN, all right, this guy's been dealing with some resistance right here. It looks like it's just broken through it. Yeah, it is, however, bearish. So we've also got some of these wicks that are going to be a bit of a hindrance. So I'm going to say, you know what, not comfortable. PCE. All right, PCP looks a lot nicer at first glance in that it's just broken out above this. Now it is bearish, but the black line has crossed over the blue line, and it looks like it's just about to become bullish. This holds some interest. I'm just going to double check with this line. It being bearish, I would be concerned with, for our basic customers especially. Yes, it did have that breakout, and you'll actually move my mouse over. It worked itself back up above that resistance point, but it ended up closing back down below it. So, basic customers, I'd probably say don't go here. Advanced customers, if you want to pull up your daily EMAs and look at pullback scenarios, you might be able to find something in this one. Not going to suggest it for our normal basic customers, though. All right, SUN. Looks to be a breakout. It seems to be similar in that the black line has just crossed through. It is still bearish. You're going to be looking at some overhead resistance with these cycle highs. Yeah, I'd really leave this to our advanced customers when you're dealing with the discrepancies where you do have cycle highs, but you do have breakouts. The biggest thing that you want to do is look for volume, and the volume is not that substantial. Usually you'd want to see a nice increase in volume, showing that other people are also aware of that resistance and don't care about it. All right, moving into the NASDAQ, we have PSSI. All right, so a bearish company. Looks to be a breakout there, but we are still dealing with this. And I wouldn't be as concerned with these if it was bullish. But because it's bearish, I am. Now there's some room to grow here. And volume is increasing. That one might be worth investigating a little bit more. But the profit margins are very tight. Might not even have its 2%. And just as quickly as I said yes to that one, it's actually just come off of our watch list. So that just leaves one more. USTR. Very bearish, but lots of room to work itself back up into the bullish. Not a whole lot of data here that we can refer to, but it looks like it is starting to rear its head. Volume is increased. Tomorrow, if markets are looking positive and upbeat, there's a good chance that this guy can end up making some profits. But go ahead and double check with earnings, double check with opening news and futures, etc. So there's one that we liked yesterday, CAE. It looks like it did pretty good today. Yesterday it closed at 30.47. Today it went down to a low of 30.35. So it looks like that would have been filled. Had a high of 30.88. So some profits would have definitely been had today. Anybody who was just looking to scalp at the market and take a quick profit, they could have done so. Anybody who's still holding on to it, you are looking at a stock which is now bullish. So all in all, it's a good trade. With that, there doesn't seem to be any questions. So the decision for us really is to just see what's going on tomorrow. If there's any stocks that either our basic or advanced customers like due to their trading disciplines, go ahead, get yourself figured out, get yourself squared away with lot sizes, entry prices, profit targets. Get that all figured out. If tomorrow morning, though, you see some concerns in the market with lower futures or bad news, either ship or dramatically cut back in your lot sizes. We need to really just see what's going to end up happening with this initial shake, with us breaking down below support. And it seems that bad news is not being taken very lightly right now. So with that said, this was the end of day market review for Thursday, March 8th, 2012. Have yourself a great day.